Morning, morning. How are we all doing this morning? Everybody wide awake? More importantly, everybody banked an absolute fortune? What a day yesterday, eh? That's the oddest CPI I've ever seen in my life. But wow, what a move. I'm just going to go over this move in a bit more detail in a minute. We'll just wait for a few more people to come in. Just want to demonstrate the power of support and resistance and Fibonacci. But yeah, very, very good day yesterday. I've just banked just under 5% last 2 days. So very good. Still got more to go. Still some decent moves setting up and underway. So hopefully it's not the end of this move with the US dollar. Looks like it's actually going to go where we were expecting. But yeah, obviously just did it in a very odd way. But anyway. So I'll kick off with just a quick recap of the trades. So this is H1M5. So where are we? 11th today. So closed out euro pound on that. From whenever that was. Friday last week, wasn't it? We entered that euro pound. So it's taken a long time, that one, but out. Morning, Neo. So out of that one, 0.6 in the bank. Got one in DD, one in profit. H4 M15 mean reversion. Banked quite a few on that. Got that pound yen. Just banked this morning. That reversal alert closed out today. Aussie dollar CAD. Closed out 2 on Aussie CAD. Shorts. Pound New Zealand. That's one trade straight up. And yesterday closed out Aussie yen. 3 on that. So initial entry there. Then we had the push up, third position and out. Could have taken twice as much on that, but you never know where it's going, do you? So yeah, banked 1.8% and 0.6 on that yesterday. You've got 0.16 running. Trend pullback, banked pretty much the same, Aussie yen and Aussie CAD. So very similar trades on the trend pullback. Morning, Trevor. Got 0.5% running in profit, 1.2 in the bank, and the COT bias. I won't go through all of these in the COT bias, but banked 2.5% yesterday and 1.2% so far this morning, and pretty much break even. So loads of trades banked on that yesterday as well. So really good day, really good day. And obviously there's still a load of trades running, which have got every opportunity to play out today. So should be a good one. But yeah, obviously yesterday we obviously had the CPI move. If you remember yesterday on my chart, I drew this line in. Not very straight line. And I said yesterday, where's my drawing tools gone again? Oh, to do another restart. Windows just seems like every other day at the moment. It's like, we need to update you. I don't want to update. So I drew this line in here yesterday on this wick, which was the propulsion candle gap. Yeah. And we were looking yesterday for a low hit. Remember I said we were looking to stop hunt these lows, take all these guys' liquidity out, and I'd be very surprised if they didn't do that. Now, they didn't actually do it yesterday. Unfortunately, so we didn't get down there, but obviously, morning Andy, we did pull back and take all the liquidity down there off the CPI move. So that's where I put that wick, and then I drew the fib on that move, yeah, and said look for a pullback to the 161, and it doesn't get any better than that, does it? 161.8 bounced to the pip, power of Fibonacci, and came back up to 100% V-shaped recovery. Just when you know how it what they're thinking and things play out to the pip like that. It's so satisfying. And then they moved up and to the pip hit the level. I drew in. So that move yesterday that I said was likely to happen, we didn't quite get the stop hunt low on the weekly, but everything else kind of just played out. Absolute textbook for what the market makers do when they're doing their stop hunt runs. So we've cleared the decks high, we've cleared the decks low, and now we've started to move. So the move I was expecting yesterday is basically looking like it's going to be a day late. So pull back and push on the US dollar today. So anything you've got US dollar short against the US dollar, hopefully today we're going to get that move coming in. So it just was a very, very weird CPI yesterday. It's just odd the way that they did it. Normally they would do it in reverse. They would take the liquidity first and run, but they pushed, took the high liquidity, then took the low liquidity and run. So it's just back to front. But, you know, they need to keep us on our toes, don't they? They certainly did yesterday. So really good day yesterday. I scalped the NAS yesterday. Remember I said on the NAS I was going to play... ignore that. This is testing today. I'm testing the EA. Tested it with a little bit too much percent. I was meant to be testing it with 0.25% on 3 positions, and I tested it with 0.5% on 3 positions by accident. But anyway, I'm testing functionality, not profitability. So remember yesterday I said I'd be looking for that drop at the end of New York. We basically got pretty much a stepped drop the entire back end in New York. So I can't remember what I did yesterday. These ones. So I played a short yesterday when I went spinning, basically. So I went out to my spin class, and there's more in that. Those were the ones in the day, weren't they? Yeah, it's just scalping. That was that was a scalp on that. Yeah, so yesterday basically I was looking for that drop. And I had to go to my spin class. It started and we broke the lows. So I basically got in with a position, waiting for it to go down. And then it pushed back up. So I scaled into a couple more as we went into that sell zone. And then basically it took me out while I was spinning, which was lovely. So I was sitting on a bike, getting fit, making money. Doesn't get any better than that. But this is the drop that I was actually looking for. And obviously it played out. But because I wasn't at my computer, I couldn't risk it coming out. So I just took... 4% or something, but that was the drop I was looking for yesterday. Remember I said we were looking for that push. So when we looked at it yesterday at the close of when I left the live room, we were up here. Yeah, so we were painted like that as a hammer. And that was what I was looking for, that bearish engulfing sort of green to red day, which is exactly what we got. So from an indices point of view, we are holding the bear drop at the moment. Looking bearish. So close of this level here is confirmation of a bear market, really. So we've had the initial push. This is the first pullback. We're in an accumulation at the moment, putting in lower highs. So we get a break and close below there today. Yeah, that confirms for me a bear market, which would indicate we are off to wherever the hell we are off to in a bear market. Difficult to call. All these people that are calling XYZ level, don't know. But we haven't at the moment. So at the moment, we are literally just accumulating. Until we get a break below or a break above confirmation, we are using this range to decide on direction. So we'll see what happens today, but I would love to see a break to the downside today. I've just taken a short. Sorry, the EA is trading for me on my other machine. Yeah, okay, 2020, that's fine. Yeah, cool. So I'm not actually trying to make money here. I'm just testing functionality. It's probably just traded the Dow as well. No, Dow hasn't crashed yet. And the DAX hasn't. The Dow. Okay. So yeah, if it starts taking trades, just ignore it. Morning, I had scalping EA mentioned in the chat. Is this something due to be released? Yeah. I'll go through it this morning because I've got a lot further with it yesterday. I managed to get some coding time in, so I'll just show you what it's doing at the moment and what's planned. There's a lot of plans for it at the minute. It's not ready yet, but I'll show you what it's doing. Right, so where are we today? ADRs, nothing. Weeklies we can ignore. It's Friday, not looking at the weeklies. News-wise today, we haven't got anything. Dead day for news. We've just had GDP on the pound. We'll have a look at the pound in a minute. 3 o'clock, we've got University of Michigan sentiment. This is a leading indicator. So the market does pay attention to this for long-term directional bias. It is something that the Fed also is aware of. They class it as orange news because it doesn't tend to actually move the market, but it is a leading indicator which is used to judge consumer sentiment, which is sort of the opposite side of CPI. So basically, it's not something we pay attention to, but the analysts and the scorecarders for the institutions, the funds, etc., will be paying attention to that, and they use that in their scorecarding. So that will decide to them as to the long or the short bias for anything. So nothing we need to worry about. Doesn't tend to move the market, but it is something that does have an impact, which is why it appears on the news. But yeah, apart from that, there's nothing else today. It's a bank holiday in Japan, so that's going to be nice and quiet. Trevor, do you have more than one PC running your EAs? No. I have one VPS which runs all my EAs, everything basically automated runs on my VPS. I only have one VPS though, but it's a powerful one. I can run sort of 6-8 MT4s with 100 charts open on it. It's a dedicated server basically, a dedicated VPS I should say, but high spec. Can we trade the average weekly range? Yes. So ADRs today, there's nothing yet. So as yet. Morning, Asini. So average weekly ranges. The reason I have these on the ADR dash is because we quite often will, on a Monday, Tuesday, get out the gates a very fast move. Fast moves out the gates are typically one of two things. Either a fundamental shift has happened over the weekend, or it is a profit take move on a previous week, or it is a reach for liquidity from a previous week. So when you get that big fast move out the gates, Monday, Tuesday into Wednesday, typically, and you hit the average weekly ranges by midweek, there's a good chance these will reverse in the same way as we do when we get an average daily range hit. Yeah. So, and the same with the monthlies. Yeah. We are on the 11th of the month. These three have already hit their average monthly ranges and exceeded them. This has done 125% of the normal movement it does in a month in 11 days. Yeah. Big move. Yeah. So that's why we pay attention to them, because chances are they're either going to stop, grind, or pull back. Yeah, either way we're interested, because if they stop and consolidate, there's a good chance a pullback will form. If they grind higher, there's a good chance that RSI will be extended and getting embedded, in which case we're due a pullback. Or they just get to those weekly ranges and that's it, we start to do the pullback. So when these light up anytime in the first 1 to 2 weeks, brilliant. These light up anytime in the first 1 to 3 days of the week, brilliant. These light up early session, brilliant. Yeah, so that's all it is. It's just looking for potential exhaustions, which is why the dash has them all on there. So with the weeklies, for example, Aussie dollar yen. Why do you keep doing that? I selected that chart. I asked you to change to the hourly. There we go. So yeah, Aussie dollar yen. So this is Monday. We pushed up 3 days. Yeah, pushed up 125% of its normal range. And then they went, we've done all this. Now we got to sell because we need to make money. Everybody that's buying for 3 days on the trot has got to get out of their positions. We have that big spike on the news. Exit. Yeah. So we start scaling in as we get to 100 ADR and we get out on the profit take. Yeah. So that's basically what the weekly ranges are for. But you need to hit them by Wednesday, really. When we get to Thursday, if we get there on Wednesday to the high, Thursday I'm interested if we push higher. If we just get massively extended on a Wednesday, I'm interested immediately, obviously. So you just use your head with them, really. They won't always play out. You will get fundamental shifts where the market will push above its weekly range and do a little flag and then push a second leg. That happens. But the vast majority of the time, we will get some kind of pullback up there. So Aussie CAD, Aussie Swiss, Aussie Yen we've looked at, Aussie US, Euro New Zealand. Yeah, that was Monday. So we are Euro New Zealand was Monday, pushed down to the lows, pulled back. But you get the idea. I mean, it's the same on all of them. Yeah, New Zealand dollar Swiss. Monday. Whoops. So let's measure this one out. So what is it? New Zealand dollar Swiss is 109. So Monday low was there. 109 pips is up here. So we hit it Thursday. We hit it yesterday, didn't we? And then we collapsed. But it's a reach, yeah? And quite often these reaches will be, like I said, before news. So they are either taking profit on the previous week's move. In this case, we had an accumulation. So there's a good example. Look, last week was down. This week, profit take. Following week's accumulation, move, profit take. Yeah. Big moves, and this is why I use RSI. Big moves mean they are reaching for something, entering large positions, or getting ready to take profits. Yeah, so when we hit RSI extensions, we know there's been a strong sell move, therefore we're going to get a profit take. When we hit weekly ranges, by Tuesday, they're reaching for something, ready to reverse. So it's all the same stuff, it's just another way of looking at it. Anyway, there's a big lesson on average weekly ranges and daily ranges there. So there's nothing to look up today on that. 4 hours, we've got nothing because everything's played out this week. We're taking profit on everything. The only thing that we have got massive extension on still is the US dollar yen. So this is, I keep saying this in the live room, I hate trading this pair because they tend to move in tandem together. So when you get a large move on the US dollar, you tend to get a large move on the yen. And yesterday was no different, except we had yen news released before US dollar news. So they kind of manipulated straight up and back down again, which is why we saw a weird CPI yesterday. But this tends to go into a grinding trend because as you get one pushing like the US dollar and the yen pushing or weakening, you tend to just get something go like this, and it's very hard to get out sometimes. It's caught me out more times than it hasn't, the US dollar yen, which is why I don't like trading it very much. But lower time frames, it's much better. But 4 hour, we are nicely extended. We have had a decent pullback yesterday. We haven't quite got, oh, have we actually? We might have just hit that high. Not quite. I mean, it has. I mean, I would say that is probably, normally they would reach for liquidity, but that is quite a big, strong move. I'd be very surprised if there's many people left in that to actually have liquidity up here. 90% of those people are out. So yeah, we've just pushed up and pulled back, but obviously US dollar is a long anyway, so we don't really want to be shorting this. If you're going to short it, you've got to look at the length of the pullbacks that we're getting. Yeah, I mean, it's from that high there all the way down to that wick low was on the news. So that's the biggest pullback we've had since beginning of Feb. So it's quite a tricky one to trade. Most likely move on this is going to be that or a flag down to there and then a pop. So it's not a very good short, I don't think. And obviously I'm long bias on the US dollar, so I don't really want to take it. But everything else we had lit up this week is all now played out, as you just seen. I've banked it all. So nothing on the 4 hours. The hourlies we're flat as well. So it's Friday. It's bank holiday for the yen. So we might well have, after yesterday's craziness, we might have a bit of an accumulation day today, but we'll see what happens. So we'll have a quick whiz through all the pairs, have a look at where we are. Ethereum and Bitcoin, just to keep going on about this point as how correlated to the indices they are now. Drops yesterday. Yeah, it's all the same now. So it's not much point in looking at crypto anymore. You might as well just look at the indices. You know what crypto's up to. Big rejection on the DAX. It's coming down hard this morning. Interesting. Right, so we'll whiz through everything. Aussie dollar, CAD. So news-wise overnight, we had New Zealand dollar inflation expectation. Let's start with the New Zealand dollar. So we had a little bit of a drop, and we're pulling back towards the London Open. So nothing particularly interesting going on there. Nothing major overnight on that news has moved that one. So it's kind of bigger than expected inflation, but that is not a shock at all. Inflation is going up across the world at the moment. So I'd be very surprised if for any reason New Zealand dollar wasn't going to follow suit. But they're up to 3.27%. So it is an increase, which is not good for the currency. But obviously, mostly that is factored in. The banks and the institutions are expecting inflation to increase, therefore they're expecting bad results. So you don't tend to get a knee-jerk reaction when you see the expectation to be bad, because they are expecting it. If it was to be a reduced inflation expectation on the quarter, then that would be right. Okay, currency should be inflated, so we'll get some move to the upside. But obviously, didn't get that. So at the moment, these are all kind of just chopping around today. Lot of correction basically off of the CPI move going on. So I think for the moment with most of these, until we get more extensions, we need to kind of leave them alone a little bit, because the money's been made out of that. We need the market to settle down now and pick a direction. So the US is obviously long, but after a move like this, likely pull back and push. So looking for a pullback, probably somewhere in that range. Looking at the low to the high, it's kind of, if you're looking for longs on this, you want to be looking at fib retracements really, and seeing where roughly we are likely to be coming back to. So the 50 is spot on with that buying pressure. I'd kind of discount that, to be honest, because it's in the middle of this move. The best propulsion gaps are the ones after accumulations. Yeah, that is the best propulsion gap. When that gets retested, it's very, very strong. Propulsion gaps in the middle of a move are less strong because it's just part of the move. It just means there was bigger selling pressure than bigger buying pressure than selling pressure there, which we know because it's a whacking great propulsion candle. So accumulation push is much better. So I would work on fibs and look somewhere in that region for reversal alerts. If we get down there, we may not get down there. We may just come into this accumulation as we are at the moment and go from there. So US dollar Swiss, again, looking for longs on it. We're up today basically, but again, very hard to read the market after a whipsaw like that. Just going to go with normal bias of long on the US dollar, and obviously we've looked at. So no opportunities really on any of those at the minute. I'd be looking to scale in longs if you've got longs, but the moves are kind of starting to happen already, aren't they, today? So M15, we're getting some decent movement on the pound US. I'm presuming that is US dollar. Yeah, US dollar's weakening at the open. So we're getting the pullback. So if we flip this fib, anywhere back into the accumulation, I would look at really highs of the accumulation as probably the most logical play. So somewhere in here, 61.8. That's obviously the wrong way around. Let's put that the right way around. So yeah, looking for probably the 38 bounce, I would say, today. Get back down to there and then see if we can springboard out of there. So with all these US dollars, obviously we're in the middle of a pullback at the minute. Pound New Zealand, good strong pound open. Pound yen, good strong open. Lovely hammer, taking out the Asian lows there and off to the races. So pounds I'm biased long on at the moment, which are all obviously moving higher today. So looking for reversal alerts to the upside on all the pounds, excluding the pound US dollar, which I think will probably drop on US dollar strength. Euros all coming down. We've been shorting these for a while since we had the pop. They're all, if they haven't already played out, which most of them have, they are playing out now. So the only one I've got left on, I think, is Euro US. I think that's the only short I've got left on the Euro. Oh no, I've got Euro Swiss and Euro US I've got short. Oh, and a Euro odd, which is just playing out. So yeah, Euro Swiss and Euro US I've got short. So I'm looking for that to come down. Next US push, I'll be out of that one. Euro New Zealand, that's already played out. So the big move has all been completely faded back to the accumulation, and we're just bouncing around at the moment, waiting for the next New Zealand dollar move to push it back down. Euro yen did its lovely little liquidity run. We've just pulled back down into that. So again, this one is going to be dependent on yen. The euro is not really strong. We can see that because they had this knee-jerk reaction, and then they went, actually, what the hell are we doing up here? Unfortunately, we had yen weakness, which pushed the euro higher. So we're waiting for the yen just to power up a little bit. Today's probably not the day because it's a bank holiday. Could be, because we could have a load of liquidity run into the yen from the US and from London, in which case, obviously, it's just going to collapse. So still short bias on this until we get back down and fill this gap. Euro pound has already partially played out. I'm out of this. Still looking for a gap fill. Pound is strong. It's playing out nicely. So if you're in any of these, you're out of them, or you're holding them in profit. So Euro Swiss is the only one that's stuck at the minute. So this one, we've just had a reverse alert on the hourly. We've just done a liquidity run as well off of Monday's high. So we've just stop hunted Monday's high and dropped. So wait for a pullback and drop. We've just had a reversal, although it's kind of a little accumulation at the moment in London. So this morning, possibility of a push up to there, and then Swiss franc strength to drop it down. We haven't had any good Swiss franc strength really for a while, which is why this one's kind of stuck as well. So it's the same thing with the yen. When you've got something that's weakened against the yen, you've got something that's weakened against the euro is going to push, because the euro's got no strength of its own. It will do the opposite to whatever those currencies are doing. So we've had a weak yen off of the back of that 0.25% increase, which happened yesterday, which is now reversed out. The Swiss franc has been weak, so we've had that push, but all they've done is take the liquidity and dropped. So I would suspect we're going to get a Swiss franc push today at some point, which will push this one down. And euro, it's already played out. Swiss yen, same story. Yen weakness, reversal alert, waiting for some strength on the Swissy. So, which looks like it might be coming through at the moment. Or is that yen weakness still? This is yen weakness again this morning. So we've got a weak yen this morning. Obviously, they're not there. So they haven't been there. So yen's weak. Everything's coming up against the yen this morning. So this isn't Swissy strength. If we do get Swissy strength, this thing's going to fly today. But again, there's nothing really setting up at the moment for me. Everything's played out. So CAD Swiss sideways. The Aussies coming down nicely. So Aussies, we're all in a bear trend on the Aussies at the moment. Lovely 72 bounce. Looking for another leg down on that one, especially obviously against the US dollar. Aussie New Zealand. Now I'm stuck in this one on the I've got the other account running the H1M5 signal on MQL5, and this one is stuck in this Aussie New Zealand, and it's been stuck in it for I don't know how long, weeks, because we got in here basically mid-Jan. I think it was mid-Jan. I'm pretty sure it was flat for Christmas. Yeah, it was. Yeah, mid-Jan we got in, and we literally have had so many opportunities to take profit, but I'm trying not to tamper with it, trying to let it just run and do its thing. But every time we get these little drops, it goes into profit by about $300 on an individual position, which I'm not taking off. So what I'm going to start to do now is every time we get to about $300 profit, I'm taking one off. Because this thing is either going to continue to just grind and do this, in which case I'll just keep banking profit, putting it on, banking it, putting it on, banking it, putting it on, or we are going to get this New Zealand dollar strength coming through off the back of the COT flipping long on it. And we are going to get this downward movement, in which case the whole lot's just going to play out and go into profit anyway. So on that one, I'm just going to start taking profit on it manually. But it's coming down nicely today at the moment. So I'm kind of leaving it as it is at present. But I'm keeping a close eye on it here. Because this is the last accumulation push where we got the propulsion gap. So this is what I was talking about with the propulsion gaps. These are the best propulsion gaps after an accumulation. This is the move. And these are the ones that after the move tend to get defended more. They trade back to them, obviously, to add positions. So potentially this is where I want to kind of do a TP on this last position that got entered. I don't know where it was, but somewhere up here we had another position entered, which I'm going to TP on. So yeah, a difficult one to trade at the moment, Aussie New Zealand. It's been a short for ages, but it's just grinding long. So I'm just waiting for some kind of decent pullback on it. Aussie yen, nice push up, liquidity run from that high and off on the news. Aussie dollar Swiss has just taken out liquidity there and run. So shorts on that. Swiss franc on Swiss franc power up, which we haven't had, so need some of that. And Aussie CAD, same thing. Looking for shorts on all the Aussies. That was your entry up there, already out. So everything we've had that's been extended this week is kind of done, isn't it? But obviously, potentially, it's going to continue. So if you want to hold them, hold them. Some people are happy to hold much longer. Me, I like to get out quick, bag 0.5% and get it in the bank, just in case. Obviously, look at where we are now from a market structure perspective on this, which is why I like to get out. I'm short on it, and it's likely this is a 72 bounce drop. Yeah, but if it's not, what is it? It's a pullback on bullish market structure to the 24 moving average. Yeah, so that's why I get out quickly, because I don't know whether I'm right or wrong. If I'm right and it's a 72 bounce, happy days. I can make 10 to 1. If I'm wrong, all that's going to happen is I'm going to go into drawdown on it. So I'd rather assume the worst, which is this is bullish market structure. Because if you assume the worst and bank, you're banking. If you assume you're right and you're wrong, it's painful. So I'd much rather be out fast, which is why you see on the EA me set up to take half an ADR, 3/4 of an ADR profit only, because I know I can achieve that very, very easily, because market will always move an ADR in a correction. So if I can get an ADR, I'll take it. Simeon, what do the liquidity zones come under in the list of things to purchase? This is not one of my indicators. This is an indicator called WRB Hidden Gap. It's in the Telegram group. If you go into the Telegram group and go into the files section, you'll find it in there. There was one I used to use called Gap Indicator on MQL5, but it got taken away for some reason. I don't quite know why, but it disappeared. So use WRB Hidden Gap. That one. If you want to Google it, it's on Forex Factory. So if you want to Google it, go and get it from Google, or it's in the Telegram group file section. If you just go into the file section and type WRB, you'll find it. But it's just from Forex Factory. WRB stands for wide range bar, which is another word for propulsion candle, which is just a big candle that is larger than the preceding candles. It's a strategy or a concept developed by a guy called M.A. Perry, which ICT picked up, and he called it something different. But the guy that came up with it is called Mr. Perry, and he and somebody created an indicator to do it. And I created a version of this indicator for NinjaTrader, which is the one I use when I'm trading futures. So that's it really for today. I haven't got anything else. Banked lots. Just waiting for a few things to still play out. And obviously today it's difficult to know what we're going to do today. This is kind of you get the calm before the storm, which is what I've been saying for ages. This was the calm before the storm. And I said, we are getting a big move off of CPI, which we got, but it was just weird. But we got the move. And now is kind of the fallout after the storm, where we will probably get a fairly consolidatory day while the market readjusts after this move. But obviously we've gone bullish. So I would expect everything to continue. It may continue this afternoon, but we'll see. We'll just have to wait and see what happens during the New York session. But at the moment, London doesn't seem to be very interested in moving anything anywhere, really. We're doing inside bar on, inside range on the Asian range at the moment. So it's kind of a little bit of a dull session, I think, this morning. So the indices as well in London have just kind of stayed within the Asian at the minute. So not a lot going on. So quiet morning, coding morning, I call it, when it's like this. I'm going to get on with some more coding. So yeah, if you want to have a look at the scalping indicator I'm building, I can do that now quickly. I'll give you a quick overview of where I am and where I'm going. I haven't actually got the latest version on this machine. Let me just compile it. That's version 2. There we go. That's gone in there. So this is where it is at the minute. So it's designed to work on M5. And we got all the buttons for scalping. Andy, the London traders have made their money for the week and are going to the pub today. Yeah. So Friday afternoons is quite often quiet. They've made a lot of money today, the banks, yesterday. That CPI move was an absolute classic. Literally every position, everybody entered the entire week and last week on the vast majority of currencies was all wiped out. They took the lot. This is just a classic. This is why I don't use stops, people. It's just everybody yesterday. The amount of people I've seen in Telegram. I'm not in many Telegram groups. I used to hide in a load of Telegram. Not hide, but I used to hover and lurk in a load of Telegram groups and Discord channels. I'm still in quite a few Discord channels. I don't participate in them. I just like to watch people and what they say and all the the P&Ls of like made a million, done really well today. Did you catch this move? I told you this move was going to happen. But they only say it once every 3 weeks because that's the only move they ever catch, because 90% of the time they're all being stopped out. And the amount of moaning yesterday, people getting whipsawed to death. I mean, even there's somebody in the Telegram group, in my group, was saying, oh my God, I got stopped out on all these positions just before they went. It's because you used a stop. I'm not, just not being funny, but that is how the market moves. It lives on stops and pending orders. If you put them in the market, they will get taken out. If they do get taken out, you will lose money. That's it. End of story. That's the way it works. But yeah, it's the banks made a fortune. Good day to be a banker. So they'll all be off buying Ferraris today. Ignore all this. This is all development stuff. So basically, what this EA does. This is on my live account, so I will keep it small. But basically, it is for scalping. So obviously, you've got buttons to take trades, and you can decide where you want your trades taken. So you can either say, I want my entry to go in as a buy stop above this candle, and I want my stop to be below this candle. Or you could say, I want to go in with a buy market now, and I want you to stick a 200 pip stop on it and a 200 and a 400 pip TP, and you can adjust all these figures to do what you like. And I'm using 0.25% risk, so it automatically calculates your lot size for you. Or you could say that I want to get in with a buy stop on the last candle. I won't do that because it's now, but or a buy stop on this candle. So you can use the top or the bottom of the last candle or the top or the bottom of this candle. And I want you to use the last candle as my stop. So I could get in now and it will put a stop under the low of the last candle. Yep. And you can modify your TPs and your stop losses at the click of a button. So as price moves with you, you could say, all right, I'm going to trail my stop by 100 on everything. You can say close out the most profitable position. So I've just got one left, move me to break even to protect my money, and etc. Yeah. So just scalped a little bit there. So that's what it's designed to do. So these buttons are basically fast, in, out, do this, do that. You've got to be nimble when you're trading low time frames like M5 and M1. You've got to be in and out like that. So you've got to have buttons. You can't muck about with this and then open this and go into your trades and find your trades and click the X, and it doesn't happen. Yeah. So this is what this toolkit is designed to do, is to get you in and out fast, and decide on your strategy. So right now, I want to stick a buy stop in here. But I don't want my stop to be under this candle. I want it under the last one. So if we're going to push up, click the button, bang, I'm in. If I don't like the look of it and it pushes down, get rid of it. Yeah, so that's what it's designed to do. And obviously you can adjust whatever you want depending on the instrument that you're trading. It's going to give you as well up here, you probably can't see it because it's tiny, but it gives you the ATR of the last 5 candles. So when you're scalping, you need to know what the current trading conditions are now. So in the last 5 candles, the average range has been 19 pips, yeah, which equates to 198 points. So it tells me that on average we're moving around about 200 points. So my stop wants to be around about what the ATR is. That's the way that I work anyway. If you wanted to use 2 times the ATR, obviously you can quickly calculate it, yeah, by what's up there. This will all be gone. This is all for testing. You've also got the ability to draw in the opening ranges. So you can pick an opening range. So Frankfurt and New York. This is the New York. This is the Frankfurt Open here, and that is the New York Open. So you can see where the opening opens are, and it will draw in automatically the opening ranges for you. It's probably best if I do this in the strategy tester, so you can see it work. Just pick the last, I don't know, month. So basically that's the Frankfurt Open. So I've set it, whatever I've set the Frankfurt Open to. So it'll draw in the Frankfurt opening ranges for you. And then it'll draw in the New York opening ranges for you. That's missing one of the lines on the New York Open for some reason. I'll fix that. But yeah, so basically it draws in the opening ranges. And it also, importantly, leaves them on the chart. Yeah, and the reason it leaves them on the chart when you're strategy testing is so that you can go and look historically at what has been going on. Yeah, there's patterns here at the 5-minute opens and the 10-minute opens, the 15-minute opens, the hourly, hour and a half. So you can back test and see what happened after 5 minutes, what happened after X minutes, because the difference between Forex and indices when you're scalping indices is indices have patterns, very discernible daily patterns that they work through. So you will find that a lot of the time when we push outside of the Frankfurt Open by X amount, we will pull back into the Frankfurt Open, for example. Yeah, happens quite a lot. Or we have what we call a straightaway out the Frankfurt Open, which you can trade and escape when we get a pullback. Yeah, so there's lots of different patterns you'll find, and you'll be able to test all these ranges with the strategy tester to develop strategies to trade. So the toolkit basically has auto trading facilities in it as well. So you've got risk targets and everything you can set up. Obviously, you can set your default stop losses, everything. You can use trailing stops. So when you get into positions, either automated or with the buttons, it will automatically trail for you, however you want it to. You can scale in. So this is the what I call add to winners. So basically, if you set that to true and set that to 50, for example, what will happen is as you enter a trade long and it moves 50 pips in your direction, it will enter another position. As it moves 50 pips in your direction, it enters another position. So it scales into your winners. So every time you get into a position and it goes against you, you get stopped out, you lose one position. Every time you get a trade that works, it adds and scales in for you, which accumulates much faster percentage gains. Yeah, so that will do that automatically for you rather than you having to do it manually. You can also set that on candle close as well. So obviously the danger with using it on tick is you enter a long, and say you wanted 50, every 50 ticks or points, however you want to call it, you wanted to enter a position, what can happen is the market will push up and then it will pull back in one candle and put in something like a shooting star. You're now in that position with a break even there in drawdown. So what you can say is, I only want it to do this when a candle closes, not per tick. So if it wicks up and then closes down, it won't enter your second position for you. If it pushes up as a bull candle, strong close, it will enter the next position for you there. Yeah, so it can scale in automatically on winning positions for you. It can also draw in ranges. So when you're looking for breakouts, so let's say we get a push and then go into an accumulation, we can look for ranges. So it will take the high and the low of the last 5 candles. And when we get a break out, i.e. the next leg up, it will obviously show you when that happens. So it's probably easier to, I think, not sure if it's turned on at the minute. Let's try it. Yeah, no, it's not turned on at the minute. So yeah, it'll do that as well. It also will automatically draw in candlestick patterns for you. So strong closes or propulsion candles, and you can adjust the wick size and the candle body size on those. It will find 2 inside bars. It will find long wick signals, which is obviously things like your hammers and your shooting stars. It will find double tops and double bottoms, which equal levels, and it will also do bullish and bearish engulfings. And you can fine tune all of these. So you can say my bullish engulfings need to have a minimum of 50-point bodies. My long tail wicks need to have a minimum of a 50% tail on the candle. My strong close candles need to be a minimum of 20 points in size, and the top wick can't be more than 20% of the entire candle length. So you can fine tune these candlestick patterns to your liking as well. So I'll just show you those. If I turn them on, might be handy. Where are they? Where have they gone? Brain. Candlestick patterns. True. True. Okay, so we'll zoom in so you can see it. So there we've got a long wick. Hammer. That's a strong close candle. So closed down with a minimum of 50-point body, and the wick was less than 20% of the entire candle length. There's another strong close candle there. Oh, sorry, that's a bullish engulfing. It's also a strong close, but it's a bullish engulfing as well. So bullish engulfing candle, strong close candle, strong close candle, strong close, strong close. Yeah, so there's a 2 inside bar, push down, push up, push down. Yeah, these can all be fine-tuned anyway. And you can also use a moving average as a filter. So you can say that I only want to you to show me candlestick patterns that are in line with the 20 EMA moving average. So it will only show you patterns that work on that moving average. And it will also auto trade everything for you. So opening range breakouts, which is what I was testing this morning. You saw me testing the opening range breakouts, which it was where it made this nice little loss for me. So opening range breakouts basically can be auto traded at Frankfurt and New York, and all settings will apply to those opening range breakouts. So you can add into the winners, you can use trailing stops, you can set your TP and your stop losses for the initial moves, and we've got this funky little reversal candle exit as well. So what this does is when you have a move up, like this breakout here, for example, when you catch a break, what you tend to get a lot of the time on breaks at the open is a strong move where you get 2 or 3 or more candles in one go. So we get that 5-minute opening range put in, for example, and we scream down out of it, yeah, like it's doing here. What then happens is it will automatically close when we get a reversal candle. What I mean by a reversal candle is a candle that closes the opposite direction above the high of that. So these are bear candles, and what it will do is it will put we won't actually put a stop there. It will monitor the price of that candle down. When we close back above it, it will get you out of your position. So if we entered here, for example, it would get you out automatically when price starts to push against you, because what you tend to get is a push and then a pullback. What this does is it starts to get you out immediately as that pullback happens. Think market reversal alerts, yeah? So this is a tighter version of the reversal alert in the opposite direction after a break. You can also use that on every other pattern, so you can get it to automatically trade on strong closes, 2 inside bars, all the candlestick patterns. It will auto trade all those for you as well. And you can obviously turn the buttons on and off. And you can also activate the buttons in the tester, which is quite a funky little feature. You've got pending order offsets as well you can adjust. But if you use it in the tester, did I just change that in the tester, or did I change that? Hang on. Yeah. So in the tester, I can basically practice scalping. So it can basically say, I want to go short. Yeah, and it will actually take trades for you in the tester and show you what your gain is on those trades. Yeah, so I can modify my stop loss, modify my TP. It will auto add for me, so I can basically just practice. So yeah, make 12%, close it. Yeah, so it will do all of that for you as well. So it's kind of like a training tool plus tool to use live trading plus automated trading system. So you can set it up to do whatever you want it to do, basically. See there, it's automatically taken an opening range breakout on the Frankfurt Open. There. I don't know what this is set to. It's just set to 200 by the looks of things. So it's, which is all what I was doing this morning. That's why I made a loss this morning, because I was just testing functionality. I wasn't actually thinking about levels, which I should have done really, but I didn't have time. So yeah, so that's just taken basically an opening range break there. I don't even know what this is set to do. There you go. So it made a loss on the opening range short. It took the opening range long and made a profit. And now it's adding additional positions on the longs. Actually, that's just traded. That's not opening position on the long. That's just traded that strong close candle there long. But you can develop strategies with it, obviously, because you can test the effectiveness of candle patterns. Obviously, this is using a ridiculous 1-to-1 risk-reward ratio. So I very much doubt this is going to make money. It's not doing bad, though. It hasn't lost anything yet. So yeah, so that's basically what it does. It's still in development. I've still got bugs. I've still got features I want to add. There's a lot I want to add to this to use, because I'm going to be using it all the time. And I want to use it a lot for analysis. So I'm developing a version of this which is going to be stripped down, which is going to be a data analysis tool, and it will automatically calculate and store the average moves on breakouts, how far they got, how far pullbacks were, so we can calculate what the best TP and stop losses are on breakouts, whether we should be scalping them, whether we should be trying to play a runner off of them like this. So beautiful breakout there. Yeah, pullback, breakout, runner. We should be playing runners as well. So there's lots of things this is going to be capable of doing, but it's purely designed for M5 and lower. It is a scalper's toolbox. I'm not sure what I'm going to call it. I've kind of, at the moment, I've called it the scalper's toolbox because I don't know what else to call it. You could use it on any time frame. Price action is the same on any time frame. So it will do, anything you want really on any time frame. Market structure, candlestick patterns, they're there everywhere, aren't they? So it's just a case of being able to fine tune. There you go. So this is obviously taking every single possible setup at a really bad risk-reward ratio. So it's not obviously going to work. But it just shows what it's capable of doing, basically. So anyway, so that's what's in development at the moment. And I've been using it to scalp myself for the last couple of days, basically. So this has all been generated, and it will also some of these actually I didn't take with it, but it will also, when you take trades, it will log the reason for the trade as well when you take one. So you can look in your history. I don't know if I did take any on that one. Yeah, there you go. So it will comment for you automatically when you use the EA to take the trades. It will comment the way you took the trade, whether it was automated or manual, and it will tell you why it got out, all that sort of stuff. So in the comments section, when you export your history, if you're journaling, for example, the comments will all be reasons for your trades. Yeah. So if you want to take a trade on a strong close, it will say you took a trade because there was a strong close candle. So it's really good from an analysis perspective for you personally. If you get all this data and dump it into a spreadsheet, or you dump it into something like Edgewonk, which is a journaling tool for traders, all the comments will say why you took a trade. So it auto journals for you as well in that respect. So really, really useful, because you've got to be on top of what you're doing when you're trading small time frames, because smallest movements make money or lose money. So you need to make sure you know why you're taking trades. And if you keep hitting the button and there is no strong close candles or anything there, you're over trading and you're doing it wrong. So but yeah, so yeah, we just got a strong close there, look, while I've been chatting away. Strong close candle, there's your scalp. So the entry on that strong close would have been there with a stop above the high, and you would now be sort of 1-to-1 there. Job done. So if you want to now go long, yeah, if we assume this is going to be a false breakout here, and we're actually going to pull down and push. There you go. And this is drawing in at the moment. You can see here. Oh, it is turned on. So this is the 5-minute range high and low. Yeah. So these are those the range high lows I was saying about, which is here. So the last 5 candle range is being drawn in here. So we can see, obviously, what happens a lot of the time is we have a push, an accumulation, and a breakout. Yeah, so this is how you take those trades. So that's candle close. As you can see, I've got auto trading turned on. Have I got auto trading turned on? Oh, you know what I've got? I've got this running on my other machine on magic number 101. That's why it's taking trades. I was just, why has that done that? Yeah, look, placed by expert 101. So I've got this running on my other PC with expert 101 on it. So this, I don't know why that's taken that trade, but I'll have to have a look on my other machine anyway. Dangerous. It's just auto trading for me now. Look, yeah, there's my proper risk reward. You see, got 200 pip and an 800 pip, and it will automatically get me out on reversals. So my P&L today might look a bit weird because it's making weird trades. I'm just going to close that. I don't want to take that trade just in case. I haven't done any analysis. Anyway, so that's that. So that's what's in development. Anyway. But I've got a few bugs to iron out and bits and pieces that I need to finalise. So it's not going to be ready for a while yet. Aussie CAD offline. What's that? Why is that an offline chart? Weird. Okay, so that's all I've got for you today. Nothing's hit ADR. Nothing's got RSI. And US dollar yen is still extended. We're not going anywhere today. It's the aftermath of the storm. So probably better off doing something else this morning, and then we'll have a look at this afternoon and see where we are. So I'll be back at 2 o'clock. Yeah, when I get back, we'll have a look at what we've done this morning and get ready for the New York Open. I'm going to watch the New York Open for the first kind of half an hour just to see how we open. I'm not sure on direction today or whether we're going to get a lot of direction on the indices after the move yesterday. So we've gone bearish. So I think what I'm going to do today is kind of maybe have a little bit of a sideline. I made about 300 odd yesterday on the futures account. So we'll see. But we are still down in this area on the indices after the pullback. So we've got a lot of rejection here. There's not an awful lot of earnings today. There's no earnings today, actually. And the only earnings we're trading off from yesterday are, I think it was Twitter. No, it was Illumina. So there's no aftermarket earnings to really drive today. So I think we're probably going to see a rotation day, which will be tricky to trade anyway. But we'll have a look. So I'll be back at 2, and we'll see what the market's like when the open is there. All right, so if you need anything, come into the Telegram group, always in there. If you want any help on indicators, strategy, EA, whatever. And give us a thumbs up if you like the stream. And I'll be back at 2 o'clock this afternoon. We'll have a look at how we've gone. And hopefully this morning we'll get out the rest of those trades and bank a bit more cash. We'll have a look later. All right, guys, have a good morning, and I'll see you at 2.